Hello and welcome to Budget with Business Standard. I am Nivedita Mukherjee. Bulls and bears are getting ready to take positions as the union budget comes closer. Along with a gallery view of what could move the indices, we have a leading voice in the consumer goods business talking to us. We also have a data story on what the budget means to the world of arms and ammunition. After being influenced by global oil prices and rising bond yields, the Wall Street will now look inwards. First up is a report on what markets expect from the budget. The bucket list may help you guess if the stock market is headed for a post-budget rally or not.
Amid the third wave of the COVID-19 pandemic, the government has marginally lowered its estimate for the country's GDP growth rate for 2021-22. Given this, markets expect the finance minister to deliver yet another expansionary budget to keep the economic engines going. Finance Minister Nirmala Sitharaman is scheduled to unveil India's union budget for FY 22-23 on 1st of February. And market mavens expect the focus to be on job creation and income support and capital spending besides rural and healthcare expenditure. That said, analysts also expect fiscal consolidation to start in this budget as revenue receipts, especially customs and direct taxes, are better than anticipated. Moreover, relatively contained spending so far could give the government the elbow room to maintain large fiscal accommodation. However, the feasibility of the same will depend on government's ability to cement higher growth in direct taxes and garner disinvestment receipts. We spoke to Deepak Jasani, Head of Retail Research, HDFC Securities, to understand this better.
Budget provisions will need to give the right signals to the Indian people and investors from abroad. In FY23, we could see the winding down of pandemic stimulus plus normalization of economy provided COVID does not keep recurring, and also the divestment of BPCL and LIC. Hence, a fiscal target of anything around or just under 6% is doable. In case this comes in at close to 5.5%, then the street may get excited. However, nominal GDP growth may come in slower at close to 13% versus 18% in FY22. Also, if the government is required to do additional spending by way of extension of free food grain scheme for a period of 6 months and higher spending on Manrega, then the path to fiscal consolidation would be even tougher. We need to remember that in case interest rates continue to keep rising, the gross borrowings by centre and states in FY23 of rupees 22 to 24 trillion could create an additional pressure on the rates. However, focus on fiscal consolidation, continued RBI intervention in the bond market, possibility of inclusion in global bond index and some moderation in inflation in H2 FY23 is likely to provide support to yields. Budget is likely to propose to exempt Euroclear settlements from tax, possibly the final step for India's sovereign bonds to be included in global indexes.
Jasani also expects the government's focus on PLI schemes, asset monetization, infra spending and support schemes for rural India and smaller businesses to continue. Increase in healthcare infra, reducing tax compliance burden, special treatment to trade, travel and tourism sectors could also be in the offing. For Amnish Agarwal of Prabhudas Leeladhar, populist measures ahead of 5 state elections may include focus on the middle and the lower class of the country. He expects higher allocation to the Manrega, PM Kisan scheme and farm loan waivers to please the rural people and higher standard deduction for personal tax for the middle class. Echoing similar views, Nishchal Maheshwari, CEO of Institutional Equities at Centrum Broking, expects the markets to eye roadmap of PSB privatization and taxation parity of mutual funds.
I think tax collections have been pretty buoyant in the last year, and despite the COVID, and I continue to believe that as we go ahead, basically, they will continue to be in a good state. In this kind of a situation, I believe one could look at some rationalization as far as GST is concerned, and that would ease the pressure on inflation also, so as to give some respite to the general public. Another interesting point from the capital markets point of view could be how the 5-6 PSUs, especially on the banking side, if the government can give out a plan how they will be privatized. And again, if the taxation on the front of debt as well as debt mutual fund, if parity is bought in that.
While all these announcements are being factored in by the markets, there are some areas that analysts want the government to focus on. These include clarity on cryptocurrencies and their taxability, exemption to be given on transfer of shares in the scheme of amalgamation, which is held as stock in trade. Reconsider dividend distribution tax rules introduced during Budget 2021. Tax incentives for investment in infrastructure investment trusts. Nonetheless, D-Street investors have begun readjusting their portfolio ahead of the D-Day, with benchmark indices already up around 2% till January 19. Since 2010, the markets have risen 7 out of 14 times on Budget Day. This time around too, markets may cheer Budget 2022 if it delivers on expected lines and or gives better than expected economic forecast. However, any negative surprises on fiscal front may halt the rally on the bourses.
The market expectations seem tilted towards a populist budget, while there are voices pointing out the importance of fiscal health of the country too. But here's someone who thinks it's time for the government to spend and not worry too much about fiscal deficit. Meet Sanjiv Mehta, Chairman and Managing Director of Hindustan Unilever. Listen in to his conversation with Charlene D'Souza and Vishal Chhabria on the government's PLI scheme, rural versus urban consumption scheme, the budget, and much more.
Hello, Mr. Mehta. Welcome to the Budget with Business Standard. So to start with, if you can share your expectations from the upcoming budget.
First is, as business people, we do require consistency of policy and rates. Last year was a much more challenging budget because the economy was reeling under a negative growth. And even under those circumstances, Madam Finance Minister resisted raising rates. I don't think she would raise rates this year, and she should not. The second is, if you look at it from a macro perspective, there are two things which need to improve. One is private consumption, which if you look at it over a period of years has come down a bit. The second is, if you look at it over a period of a decade, the private capital investment has come from the high 30s and nearly 39% at the beginning of the last decade to nearly about 31%. So during this period, the government spending will have to pay up. So what I'm alluding to is that the government should not sharply worry about reducing the fiscal deficit, but put money where you will get a multiplier effect on the economy. And those are things like investments, infrastructure. So if you do that, then as the consumption goes up, then capital investment is not happening because the capacity utilization is still in low 70s. When the demand comes in, capacity utilization will go up, then capital investment will happen, and then the virtuous spiral will start. So in the intervening period, the government will have to play a big part, and they should aggressively. The other part is for Reserve Bank. I think Reserve Bank has wonderfully managed the monetary policy in the last couple of years. And now it would be a bit more challenging because they have to ensure that the inflation doesn't spiral out of control. And at the same time, ensure that you do not stifle growth. It would be a very fine balancing act by the RBI. And last but not the least is relief to the poor, which is putting more money in the hands of more people. One is rural poor and the other is urban poor.
What happens with the urban poor? How do you address the issues there? Even they have lost jobs due to the pandemic.
So right, Charlene. Government in the last 2 years have done a lot for the rural poor. My expectation would be a Manrega equivalent for urban poor should also be done, because there are a lot of poor people who have lost their jobs. Just to give you an idea that we cater to restaurants through our Unilever Food Solutions. And when I was reviewing the business, it transpired that nearly 30% of the restaurants have closed down in the country. Then a lot of contact businesses, travel, tourism have been impacted. So yes, urban poor also, they are stressed people. They also need to be helped.
Sir, it's said that India is a large agri-produce market, but not much seems to have happened on the ground in terms of exports. So are PLI schemes enough to address this, or is there something more than is required?
It is, I always say that it is and not either or. Now, what does PLI scheme does? When you look at exports, we have to compete on cost, on quality, on service and innovations. Then only you can compete on exports. Now, most countries, if you look at, they have been focusing on exports in sectors where they have a competitive advantage or where they have created a competitive advantage. Now, historically, gems, jewelries are where we have got a competitive advantage. But if we have to create competitive advantage, then you need the benefit of scale. And what PLI does is helps you create that competitive advantage by giving you the benefit of scale. So I believe PLI are the right things to be done because we have picked up focus sectors, right? 13 odd sectors. And there the government is saying this would be linked to incremental production. And this will allow people to scale it up, to invest behind the exports. It's absolutely the right thing. So, this year our exports have been decent. For quite a few periods, they were languishing in the vicinity of $300 billion. Now merchandise exports are, should be reaching $400 billion this year. So which would be nearly $100 billion increase this year, which is a pretty good increase. Now the question is, how do we sustain it? So one is this bit, giving the benefit of scale and enabling, creating competitive advantage in the industry. And the second bit is we will have to become a major R&D and innovation center, Vishal.
Thanks a lot, Sanjiv.
On the budget specifically, the point that Mr. Mehta is making is that the government has to play a big role in reviving consumer demand and private capital expenditure. Continuing with expenditure but at a different level is our next segment. What has the budget done for our armed forces in the last few years? Let's look at data.
Now in the third decade of the 21st century, India faces many challenges. While it has firmly established itself as one of the greatest military powers, modernization always seems like a game where we play catch-up rather than lead from the front. Flanked on one side by a belligerent Pakistan and on the other by an assertive China, the threat of a two-front war is something our military planners have always had to build into their strategies. On top of that, it has always been a long-term aim for us to dominate the ocean which bears our name. The Quad partnership between India, the US, Japan and Australia aims to be an effective counterbalance to China in the Indian Ocean region. The defense budget is broadly divided into 4 parts. Civil expenditure goes towards housing, public works, border road organization, Coast Guard, military police and CSD canteens. Revenue expenditure is for pay and allowances, administrative costs, logistics, ordnance factories and other such expenses. Capital expenditure is for buying new equipment like rifles, clothing, vehicles, tanks, field guns, combat jets, helicopters, warships, submarines, and the like. Pensions and other retirement benefits are for millions of veterans and ex-service personnel. As this chart shows, revenue expenditure is the biggest outlay for the armed services used to pay, maintain, arm, and move the second largest military force and the largest voluntary armed force in the world. Capital and pensions are the next 2 biggest expenditure heads. One of the main political positions that the Modi government takes is that it is strong on national security. Hence, it followed that after the 2019 clashes between India and Pakistan and skirmishes on the LAC with China, there was an increase in capital expenditure and more equipment was ordered and acquired, and defense modernization got a fillip. Between 2017-18 and 2021-22, capital expenditure has increased by almost 50%, while revenue expenditure has only seen a 16% jump. The Air Force and Navy's capital expenditure have jumped 52% and 65% respectively in the last 5 years, as Rafale fighters, Chinook and Apache helicopters, Visakhapatnam class destroyers and Scorpene, and Arihant class submarines were inducted. However, what would also be a concern for budget planners is that defense pensions have also risen 26% in the last 5 years. Efforts are on to cut costs wherever possible, including closing military farms, and it is possible that the military would also let go of surplus land, like it is being encouraged with railways and other parts of the government.
Whether it's markets, consumer space, or defense, what's a budget without numbers? So here's some more to get you thinking. Do you remember which finance minister presented the most number of budgets? Your time starts now.
In public perception, budget speeches are the most recognizable motives of a finance minister. If asked which FM has presented the most number of budgets, many would perhaps reply P. Chidambaram or Arun Jaitley or Yashwant Sinha or Manmohan Singh. After all, those are the ones we remember in the post-1991 Colour TV era. But in fact, the distinction of presenting most budgets goes to Morarji Desai. Desai, who later went on to become the first non-Congress Prime Minister, presented a total of 10 budgets between 1958 and 1963 and then 1967 and 69, under Prime Ministers Jawaharlal Nehru and Indira Gandhi respectively. P. Chidambaram, most famous for the 1997 Dream Budget, presented 9 budgets in 3 stints at the North Block, first from 1996 to 1998 as part of the United Front government, and then in 2 separate tenures in the first and second UPA governments. The late Pranab Mukherjee presented 8 budgets, first under Indira Gandhi from 1982-84 and then under Manmohan Singh from 2009 to 2012. After this, he became the president of the country. Yashwant Sinha, Yashwant Rao Chavan and C.D. Deshmukh have presented 7 union budgets each. Before his time as finance minister, Deshmukh was the first Indian to head the Reserve Bank of India from 1943 and 1949. He also founded the famed India International Centre. Manmohan Singh and T.T. Krishnamachari have presented 6 budgets each. Singh, of course, presented the best-known budget in independent India's history.
Hope you enjoyed the little quiz and rest of the show. That's all for today. Bye for now. We'll be back on Thursday with plenty of exciting news and views on budget.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.